Right now, the crypto market is once again seeing strong interest from both big institutional players and retail traders. The main star is Bitcoin, holding steady in the 115,000 and 118,000 range for several days. This shows that sentiment is still positive. But at the same time, traders are being cautious. Everyone is watching to see if BTC can break through the 120,000 resistance and stay above it. If it does, that could kick off another leg up. Ethereum is also doing well, trading between 4,000 and 4,300. It's being supported by strong developer activity and the growth of Layer 2 solutions, which make transactions faster and cheaper. Altcoins and meme coins, however, are all over the place. Some are pumping hard, others are dropping. It's a very project-specific story. 2. Why the market is moving like this. Politics regulation. The U.S. is actively discussing new rules for stablecoins, digital tokens pegged to the dollar, and asset tokenization, turning real-world assets like real estate or stocks into blockchain-based tokens. If laws are passed that make this easier, crypto could see a big inflow of money. If the opposite happens and restrictions are put in place, the market could take a hit. Global economy. Global markets have calmed down a bit. U.S. inflation is less of a concern, and central bank rates have stabilized. This gives investors more appetite for risk, and crypto is one of the main beneficiaries. 3. Bitcoin, BTC, the market driver. Bitcoin is currently around $115,000, 118,000 watts. Key levels to watch: 120,000, 153,000, strong resistance. Many traders will take profits here, so breaking through will be tough. 112,000, the nearest solid support. If we drop below it, the next stop could be $100,000, a major psychological level. What the big players, whales, are doing, institutional investors, funds, corporations, and large traders, are still accumulating BTC, but they're doing it steadily rather than all at once. This is a good sign for the long term. Even if we get a correction, it's unlikely to last long. 4. Ethereum, ETH, the second pillar of the market. Ethereum is trading at $4,000, 4,300. Its growth isn't just because of bullish sentiment. There's also real tech progress behind it. Layer 2 solutions speed up transactions and cut costs while keeping Ethereum's security. DeFi and NFT ecosystems are still heavily built on Ethereum. Asset tokenization projects also tend to choose Ethereum as their base. In the long run, ETH is seen as a more functional cryptocurrency compared to BTC, which is more like digital gold. 5. Altcoins, meme coins. Altcoins. It's a mixed bag. Some projects with real use cases, DeFi protocols, oracles, infrastructure blockchains, are seeing steady growth. Others move purely on hype and can drop just as fast. Meme coins. This is even more volatile. Whales have been actively buying certain meme coins, pushing their prices up, but the risk is massive. Prices can drop 50-90 in a single day. If you play in this space, keep your allocation small, 2 to 5 of your portfolio, and have a clear exit plan. 6. Risks you shouldn't ignore. Regulatory shocks. If the US or Europe introduces strict laws, prices could crash instantly. Hacks, exploits. Sometimes DeFi protocols or even Layer 2 solutions get exploited. Liquidations of large positions. If big funds or traders using high leverage are forced to close, it can trigger cascading sell-offs. That's why it's smart to keep part of your portfolio in stablecoins or fiat, ready to buy the dip if needed. 7. What to watch over the next 2 to 6 weeks. U.S. crypto laws, especially on stablecoins and tokenization. BTC holding above $112,000. If it stays above, there's a strong chance of reaching 120K, 123K. If it breaks below, we could test 100K. Ethereum Layer 2 growth, a bullish sign for ETH and related tokens. Whale activity in meme coins can create short but powerful pumps. 8. Recommendations by trading style. Long-term investors, keep BTC and ETH as your core holdings. If BTC reaches 120K, 125K, consider taking partial profits. Be ready to dollar cost average if we get a correction. Active traders, play the range. Buy near 112K, sell near 120, 123K. Watch trading volumes and funding rates on futures markets. Risk takers, limit meme coin exposure to 2.5 of your portfolio. Take profits in stages rather than holding too long. 9. Final take. The current market is optimistic but cautious. BTC is the main driver, holding high levels. ETH is steady, backed by tech development. Altcoins and meme coins are risky, great for speculation, but dangerous for large allocations. The biggest potential shock is from regulations. If Bitcoin breaks and holds above 120K in the coming weeks, we could see another rally and more capital flowing into altcoins. If it fails and drops below 112K, expect a correction, which could actually be a buying opportunity for those prepared.